tryna take it down, place for you just scoring minds, best the bar.
All right, ladies and gentlemen, I got your watch list coming into January 24th, 2020. And besides going over the plays, I want to talk about, make it a little bit of a tutorial here, how we turned $40 into about $400 here on Intel earnings. But I want to go over a earnings strategy with you guys so you guys could see the sheer numbers of, and just a philosophy behind how to go about this and set yourself up while getting pretty much every opportunity. So we used option trading if you guys are not familiar, but also you utilize these watch lists, baby. If you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description and it is pinned in the comments. So you could have watched this trade live on the Intel. You could have followed through with all of it. You could have got the idea. But again, look, it's even in the thumbnail. Just make sure you guys are subscribed here. Make sure you hit that bell, but keep up to date with the watch list if you can't make it there all the time. But we've been going over these plays and these strategies. Again, we are going to keep covering these earnings, so just stay in touch with it. If you guys have any questions, you post them below. All we ask is that you are positive and respectful. That's it for the stream, for this, anything. We love you, baby. Oh yeah, make sure you guys check out the other channels here. Colt Real Estate, Colt Music, Colt Cards. We got some videos. We're going live on this tomorrow too. Ooh. Oh. And, well, I'm going to cover the keys. I have all this for you. I have a lot. I even have a few plays we made today, and I want to go over some of the plays I'm going to be looking at tomorrow. It's going to be on Froggy Friday, so I hope you're ready. But don't forget the most important thing. Post your watch list below. Let us know what you're looking at. Post your plays, any earnings plays, anything. We need to source that information. And this reminds me of my next little tangent or announcement, or I need your guys' feedback on this. You let me know, okay? But I always tell you guys to post the plays. We want you to post the plays. I love it when you post plays. Again, fresh eyes out there, baby. So keep sourcing in the chat and in here, please. So my idea is we make another YouTube trading account. And I think, I don't know, a fair number. I was thinking I put $500 a month into it. Maybe we go less, maybe we go more. It's up to you guys. But then literally use a random comment generator. And then once a week, or maybe, I don't know if we could do it every day, go through the comments randomly and just randomly make the plays. And I want to show you guys kind of just, again, you're seeing me trade, you're seeing other people trade. That way we could put people's trades to the test with real money. And you guys can see even what would happen or what would the results be of randomly just picking stuff from a comment generator. So I think it'd be fun. And again, hopefully it highlights my point here, man. I need you guys to post that info. That's what we want. So source that info, baby. Be positive and respectful. What you scared for? You ain't got to be scared, baby. Relax. All right. So do that, like the video, all that stuff. But how did we turn this money? It was because of earnings. That's going to be the first thing you guys want to know. But the play was what we talked about over the last few days. And we even had that there on the nightly watch list from 2 days ago, the one with the thumbnail. But what we did was an option trade. We bought these 65 calls, and now they're in the money. They were out of the money initially. They even went up a lot today. Monday, I wanted the 64s on the watch list. These were the ones I originally wanted, and they were going for 16 cents. Oh, no, excuse me, 26 cents, so $26 a pop. But then what happened, Monday morning came around, or again, Monday was the holiday, so by Tuesday, with the earnings right around this week, Intel went up about 1 or 2%. You know, they were trading at 59 at the time. They had a nice little run up. So that brought the premiums pretty high there. So by the time we were able to trade in the morning, I ended up settling here for the 65s. And we ended up spending a lot. We paid $42, or about 40 bucks each. And I bought 3 of them. And now this is the first part of even the strategy, because we got to actually make this trade technically for free. There was no risk on the table coming into earnings. So this is part of the strategy, as well as now we're going to even talk the risk management and the balances. That's what I want to go over here in the keys. But the key was with this 65, we bought it for 40 cents. And then yesterday, they went up about 100%. We sold them out at like 86 cents. And I bought 3 of them for $40. I spent $120. And then now they went up to 80 cents a pop. So then I sold 2 of them for 160 or 170 bucks. So if I spent like 124, 126 to get in for all 3 contracts, I sold 2 of them for 170, made like a nice little $50 profit. But then now I had this trade pretty much for free. If I sold out, I could have took $100 profit today. It ended up going up, but now they went in the money. So this is how you understand options, even in general, even if you are confused. You know, on Tuesday, stock was trading between like $58 and it went up to $60. That's why I said these, you know, got expensive. and I didn't get the ones I originally wanted, but I still wanted to play the earnings. So now, while the stock was at 60, I got somebody agreed to sell me 100 shares at 65. And now they knew the earnings were coming up. They saw the stock moving, so they charged a decent amount. They charged us $40. So the stock's trading at a lower price. The only way we would benefit off that is if the stock went above $65 by that day. So now it's at 66. After hours, it hit 68, and I'm expecting it now to go up. I think it's probably going to open around 68 tomorrow. There's going to be a lot of upgrades and stuff like that. But now how did we make money off this contract? Because now that it's up, again, this guy agreed to sell us 100 shares at 65. If it opens up tomorrow at $68, this contract would be minimum worth $300, and then there's some time on it. It'll probably be like $350, almost $400. Or if the stock opens at 69, it's a $4 difference. Again, we have the right at 65, so we could buy it from that guy who gave us this contract and then sell it right at the open market. But again, now, since that contract has that worth, you don't need to go through that process. You could just sell the contract for usually the price that the contract is worth. And that is the real intrinsic value being in the money. That's what I mean by worth, because again, price and worth and value are very different, my friend. But that's how we did the play. But hopefully you're seeing, that's even a little mini option tutorial for you guys. But it's understanding how you know now, even after earnings, what your contracts are going to be worth. You could use option profit calculator and stuff like that. But at the end of the day, it's calculating the in the money, the value. And that's what you're trying to get. We're trying to buy stuff out the money that goes in the money. That's why, we only got one extra week of time, so that benefits us for a continuation. But after some point, this contract isn't going to be as stable. It's still not stable. So again, moving forward, I'm probably going to ghetto spread this tomorrow morning, but it's one, selecting the play, but also how now we played it before earnings. So that being said, now let me get into the keys for you guys, and we could talk about this a little bit more, but hopefully now what you need to be watching tomorrow is the chip makers. And like we said, baby, everything moves in packs. That's what we've been talking about, because now after Intel went up, we did the same exact play. So again, the same exact strategy I did on Intel, I did it yesterday on NVIDIA. So you guys could watch the watch list, literally yesterday's watch list before this. Or again, if you were on stream, you saw this, we bought the NVIDIAs. You guys remember now, I got those February 21st. We bought the 305. And what did I do now? I bought these at 28 cents. We bought 10 of them. Now they're at $40, even a little 38 to 40 bucks. But then now what happened after this report here with Intel, NVIDIA shot up another $4 today. Now again, it shot up $4 today all day. And that's why we went up 34% on those contracts. But now it shot up another $4. Intel's going to bring things up. Again, Intel's going to bring up everything. Even Microsoft, Qualcomm was a loser from it. But now you're even going to start seeing upgrades. But like I'm saying, the same strategy I did with the Intel for the guys trying to figure out what we're doing here and how to play this, I did the same thing on NVIDIA. But now what you guys got to watch for is, if you want to go about selecting these companies, you have to understand which industries are going to move, which earnings are coming up, and then watching the difference. There's going to be kind of a wave we need to ride back and forth I'm going to talk about here. But even for tomorrow, even for this week, watch the chip makers, watch out for more upgrades. But then there's even going to be companies that are not related with earnings. That's what I'm saying. There's going to be a wave of that. You could call it exuberance, hope, whatever. Or even then now, people are changing their insights. As one company reports, it changes expectations for everyone else. So that's why there is this effect that you could play leading into earnings, besides the fact that, too, some companies, the IV goes up in general. So that's what we're watching for. That's how we've been playing this earnings. Now, this is coming into the strategy and what I've been telling you guys. Endurance, baby. I said all of you guys just need to survive to the point now. If you could survive the next 6 to 8 weeks pretty much and not blow up your account, you're going to hit one of these plays here again. And now it's depending on the strategy you go about, whether it's credit spreads. And I went over a credit spread today, even down to playing the earnings. But now you have two choices to make. You pick and choose and make the decision. Is option trading extremely risky? You can't lose all the most financial investment. Please, financial advice as a purpose only. Yes, it is extremely risky, as you see, but it's up to you to choose if you're going to play even earnings. Earnings is extremely risky. Again, a lot of people will say not to play earnings. So, and there's rightfully so. Earnings is a gamble. So now it's, how do you go about that? You have the choice now. You pick and choose certain companies. I pick and choose some companies as well, but now also sometimes I'm letting the plays and the balance dictate. I'm kind of doing the hybrid, but I'm even thinking for this earnings season, maybe I make that other account. Maybe we try this out if you guys want to see. What if we did try to play every earnings? Damn, I'm going to make 2 accounts now, 2 more. Fuck. But now to keep that endurance, you need to either say, hey, I want to play these plays, and now you could even start setting up for them now. Start picking and choosing which industries or companies you want to play, or you let the balance of your books decide how much money coming in and out, how much do you have, and then play the numbers. You say, hey, is it meeting the criteria? Can I reasonably get my hand in the cookie jar for a safe price where it would make sense after balancing everything? So this is the example now I'm showing you, because again, how did we get this intel? How did we turn $40 into $400 or even more? We're going to see tomorrow, maybe even less, but it's playing these earnings, and this is that strategy I'm showing about how to do it. But now, how did we get there? Did I just pick Intel? Yes and no. I did put it on the watch list. I liked Intel, but there was other earnings. There was Netflix. I like Netflix. I did choose those, but I didn't play every earning. So it's not like we just ran. We said we knew, I know everything. You gotta sign up for the everything. I gotta do what's going to happen. No, I did choose based on what companies I know have a big effect. Again, why did Intel report, and then why did everything else go up? It's also knowing the companies and their industries which are more likely to move or not, and then I look at the option chain to see if there's a good deal and where it makes sense, where I could reasonably make a play on it, where it's not going to cost the arm and a leg or an extraordinary amount, where it's something super far out the money or just really unrealistic. So we played a few plays, but this is what I mean balancing the books. Here's what we did. We played Netflix. We did Netflix earlier in this week. We spent $110. So we'll do a negative 110 there on the calculator. Then we played Texas Instruments. We were up on that play, but we didn't take the profit, but then we ended up losing both sides. Remember, I got to play both sides for $66.50. So if we lost both sides, now we're down to losing $176. And again, I got to play both sides on Netflix too for the same $100. I had 3 different plays on there. And then now today, VFC, we haven't taken it yet, so I'm pretty much taking what it's worth now and really what it was at and what we could sell it for. But the VFC's actually hit, but we still have time, and that could still continue, so who knows. But we'll assume $30. If I sold out of it now, I would have actually $20 realized. So I'm putting it right in the middle. It was up like 40 at one point. But again, we only put $42 into that play yesterday. But even then, after those 3 plays, I'm still down $146. Now, $50 on Intel, that was a realized profit, because again, I made those shares free. The option that I'm holding today, that one was free. So remember, I bought them for like $124, $126, sold them out at $170 something. So we got a $50 profit there. So now coming into this play now, if we do hit the potential on NVIDIA, but this is what we have to realize now. So all of these totals so far right here, right now, assuming Intel didn't even win or anything, we would be down $96.50, but we got to play 4 plays. But now let's say if we do take the 400 potential, if it opens up where I think it's going to open up at, and we take that money, add 400, we are now sitting pretty at 303 profit. And then now if I even took the 140 that NVIDIA is worth and made that free, or even just booked the profit, we're sitting at $443. So again, it's using small amounts. You see how I've played all these different plays now, and this is setting up into what I'm putting here in for earnings. But now it's balancing the books essentially. If I spent $400 on Netflix and then did all the rest of these plays, I would still be down now. So it's about being able to find a way to get opportunities where you're playing both ways. You're getting some of the bigger name companies. You're not spending a lot. So if it does hit, you'll make a sizable income. Again, this one play covers that. Or if you lose, you're not losing as much. So again, even if we did lose all of these, even if the Intel, we made no money on it, we would really be down $96. And then if we just cut out the NVIDIAs, we would actually be up, or we'd be down $96 or whatever happens with NVIDIA. But hopefully you guys get that this is the easiest way to go about it, but you have to, it takes some diligence on your part. So again, you're going to have to pick and choose. You're going to have to see how much money do you have and really now decide which ones do I want to play. And even when you do decide to play, you got to make sure you're setting up a reasonable amount for every single one. Don't scale up too many plays. Don't only get one way. That's what we talked about, because again, we're trying to get maximum opportunity. But even then, it's not like you don't have to do that. This strategy is very flexible. It's just keeping this core concept in mind, and then now taking advantage of the earnings season, and then especially certain companies. Oh, there you go, baby. That's a little mini tutorial on you. That should help prepare you, put some of you guys on game. I don't care your experience level. This is just good to see. And let me know, should we make this as another account? I don't know, but hopefully you guys are smart about this and are really fully able to take advantage, because again, if we're able to just stay alive, you're staying positive, at the very least you're getting to play all these opportunities, and you're either making a little bit money or no money. But then if we do hit some of the ones that we did get to see last earnings season, or if this market prevents or throws anything crazy our way, we will be fully ready to take full advantage of it. So let me know what you guys think. Let me know what you think. Hopefully that helps you. If you have any follow-up questions, let me know. If you want me to make a follow-up video, that too, we even have other videos, check those out. But finally, the last thing you guys need to watch out for is going to be the neurovirus. Again, that is, it's actually watching out for everything with the markets. Again, until unless there's negative effects on the overall market today. You know, we saw the market pretty much do not much. It was actually down most of the day. Then after the World Health Organization didn't classify the neurovirus as a World Health emergency. They were 50-50 split on the board. It was a really weird thing. We listened to the press conference of it, but essentially what is going to happen, it's going to digest more in literally the incubation period. So the market is going to take everything in waves, but now you're going to start seeing it'll take days at a time in different, waves of time periods before you really start to see now people react, the market react, and how serious it's going to be. But it's literally going to have to come in waves, because they even said that. They said some people haven't even died yet from the first cases that still need to die. And that sounds so morbid, but it's the same thing now. There's people who have it today, and we're not going to know that they actually have it. They won't even know they have it till 2 weeks from now. So again, you're going to start hearing about this in waves. So keep that in mind in the market. And it's actually the same thing with earnings. There's going to be waves, and then the market's going to digest earnings and information. The market's going to digest what's happening with this neurovirus. Then the market's going to stand at it. It's going to stay in a range temporarily. And then the next wave comes in of news, earnings, everything. So same exact thing with Iran and even the rest of these market risks. So just keep that in mind moving forward, and understand now you got to find the balance to be able to ride the wave and then not jump it. I'm moving around right now. I don't know if you can hear it with my voice. So just learn to ride the waves and be prepared with that, especially as we're timing. This is the essence and the art of doing a swing trade. So keep that in mind. But let us get into the plays. As far as today, the plays I made, I'm still holding the plays that we got into for earnings. I'm holding those NVIDIAs, and I plan on doing the exact same thing I did with Intel, where I'm going to sell a few of those, probably make them free, and then be able to hold those into earnings. But if they go up, and that's the thing with those Intels, the more they go up, pretty much the more contracts you could get for free. I'm not going to ghetto spread those. I want to do exactly what I did with Intel to leave me with upside. And again, those NVIDIAs got time. But besides that play, I did make an Intel put. That was today. Because again, now you saw the whole thing with this Intel. This is how we even protected ourselves. And this is even the next part of the strategy here. Let's go back in time again. Remember, we bought the play on Tuesday. And again, it moved up quick. It sucked how fast it moved. But we got those at the 42 cents. We got 3 of them. Yesterday, we sold 2 of them to get a $50 profit. Kept 1 for literally for free, because now again we got all of our money back. And then now today that contract was worth 100. The earnings was going to come out here at close. So what did I do? I grabbed that Intel $58 put for 25 cents. It was just outside of 1 standard deviation, but that put pretty much now allowed us to make money on the downside. If in fact Intel had a bad earnings and maybe just as bad as they did good and then they dropped, it would have helped us make some money, considering we had $100 of profit sitting in the one we held. But that's how I was able to play both ways, because even then, if I spent no money on the first trade by spending $25 on the second trade, it's just extra $25 of risk. You could have added that, think balancing for that $96. I would have just lost an additional 26, but that would have also been to protect it. But as you see here, we'll lose on that play tomorrow, but the gains we're making from the main contract that we're holding, that should be good. So there was that play. Then today I did the Roku. I was talking about that play, and this one is actually very, very unique. You can see here, we got it even in the morning, and it was a Roku February 21st $80 put. I bought that for 35 cents, $35 there. But again, I bought this in the morning, and this is the whole point. We bought it for 35 cents. It was up. We still definitely took a loss, but 5 cents, I don't know what the percentage is there, like about 20% maybe. But that's why with one contract that you don't really feel it. Again, going in small, they report at a later date, so we have time. You could kind of see how I'm preparing. That's what I did with NVIDIA first. I bought one contract, then I waited, then I got the second ones. You see, using the small amounts to my advantage to still have opportunity to scale in, and then I could reassess situations as even time goes on. So there's that play, but it did go down after we bought it. And then now, here's, I guess, another mini tutorial for you guys. I did an HD credit spread, and this will help explain some of the logic for you guys. But I wanted another one. I said this on the watch list yesterday. I wanted another daily spread. And what I mean by that is where you sell a credit spread, we're doing a credit spread because it's more advantageous. It's easier for contracts to expire worthless than end with value. So I shorted contracts using a spread, hoping that the premium would expire, and I sold one of the high credit spreads. So it pays out $215, but my max risk is $35, but it has a low probability of hitting because it has such a good risk to reward ratio, risking $30 to make 200, but the probability is low. So that's something you also, I said in the spread video, you have to really differentiate between that. It could have a good risk to reward ratio, how much you're putting down and how much to make, but that doesn't mean it's a high probability. So it's a low chance of hitting on this, but that's why, I figured I'd take it, because again, if HD did in fact drop, so I did a call credit spread. So I'm shorting the calls, hoping they'll go down in value. So what I did was I sold the 230 and then I bought the 232 and I was able to collect a $2.15 difference. So it's literally like that last play we lost on last week, but instead of doing it here, I got to do it right here. Oh my gosh, that's actually scary. It looks just like last week now that I think about it. No, but essentially now I make money if the stock goes below like 232.15 or something like that. Yeah, actually there. So yeah, and that's how you guys could understand it. By getting a net credit of $2.15, you have to really think about it. The stock's at you shorting the 230, the stock's at 233 already, so that contract already has value because it's a call. But then you own the right, so any value past 230, 250 is covered by purchasing this. But essentially, your break even, it's quite simple. Since you collected so much money, you collected $2.15 up front. You add that to the first strike that you sold, and that's your break even. So, because literally, if the stock closed at 232.15, you would be down $2.15 on this contract. This one would be worthless, but then since you got a net credit of $2.15, you would literally break even. And that would be a break even would mean you lost nothing. If it was above that, you would lose $35. But now, $232.15, if that's your break even, anything below that, you would actually make a profit. So even if it closed at $232, even though it's still in the money, but you collected $2.15, you would actually make $15 off that. So that's why we made that play. Again, I want to keep making sure I'm getting these. I do probably need to switch over to some of the higher probability, lower credit plays as the account dwindles down, but we'll see here. We still got some earnings and those TOTs are working. But there was that, and then finally the last play I made today was real puts. I talked about this yesterday, and I only got this because of the real estate guys, and this is, even showing you, this is how options are originally designed and used for. These guys, again, you could ask them many questions. They decided to buy 1,200 shares of this. This is literally what they're losing everything on. It's kind of funny, but not really. It's kind of sad. But they got their earnings coming up. They even had some lawsuit or something on them. So what I did was I grabbed them 20 puts. I spent $400 on it for the 1250 puts just in case. So if it dropped, they could still lose money, but I got double the amount. So maybe that could help balance it out. But by buying the puts, it's saying if the earnings comes out by spending $400, if it does indeed drop, it could protect them from taking even bigger losses, even make them money to help pay for some of the damage. It's literally options are insurance. So there's that. And I'm going to wait a little bit before earnings. I'm even going to sell calls on the shares they own too. So make sure you guys stay tuned on the stream. You guys will see this is just managing covered call positions, if anything, and how to even protect a large position like that. But those were the plays we made. As far as everything else now, watch ISRG. They had earnings today. So I thought it was weird. I think they had their conference call a few days ago. It was weird how they came out, but watch them again. You saw it with VFC today, and I would keep watching VFC, but this is what continuation looks like. The stock drop, it only opened down. It was down 4 or 5% in the morning, and then it continued to drop and close down at 9%. So we were losing on this in the morning. By the end of the day, we were actually up, and even towards here, we were up over 100% total on our initial investment there. So watch out for those and everything else. Watch HD, like I said, and then watch out for Amazon. This is one. Keep a tentative eye on it. I want to start actually observing the premiums, but this is one coming into earnings. This may be one we might want to start setting up soon. Again, we still have those old spreads, so we'll see how those play out. But watch that. Watch Roku again. Like I showed you guys with the contracts, the fact that those contracts didn't go down a lot and they had time, I would definitely keep an eye on Roku. And I think that's telling something. I think even premiums both ways might start to go up. They're at a very interesting spot because, again, with how Roku dropped and how much, it shot up, I was expecting I would have lost a lot more on the puts, but we didn't. So I think that's an observation we might be able to take to the bank. Then watch Guild. They reported today that they're going to be, some of their drugs for like Ebola could be used with a neurovirus. So they shot up, they came down, then ended up shooting up after that. It came out once, and then a lot of news outlets picked it up later. So that was interesting. I don't know how I feel. I haven't played any of these sickness plays yet, or at least on the medical. I have just those spy puts, and we're going after other things. But watch that. Watch Boeing. They launched up today, 318 again. Remember, they were pricing in that 320, even 316 was the other one after the first run up. But anywhere between that range, we'll see the option chains kind of cooling down now. But we've seen that with Friday, and I wouldn't be surprised to see some crazy move on Boeing with Friday. So we'll keep our eye out for that. Watch Beyond. They dropped today, but they only dropped $4. And the fact that they're holding up a little bit better. This is kind of looking like another double dip, but don't get fooled, okay? That's what you got to be careful for, because some of the contracts are still holding value. See, they know you know about the double dip, so now they're going to try to give you a lot of different appetizers. They're going to try to tempt you. Just be careful. But watch Pinterest. A lot of people called them out today, and then, you know, they've been kind of just having one of those little melt ups there as Snapchat, you know, our boy's doing our Snapchat looks a lot better. Snapchat's even double this size. Ooh. Keep eye on both of them. Both, again, these have been kind of these movers, these smaller cap movers. Again, if everything starts doing good, people might rotate into smaller cap names to chase, you know, gains. But here on this Friday now, some of these contracts might get a little bit cheaper. So we'll see if we can take advantage of like really penny contracts, but there has to be a big move embedded in it. Dude, that's another 3% on them. That's crazy. Then finally, in the name of Intel, we're going to be able to play that a little bit, but watch out for continuation amongst all the chips and watch out for even upgrades. So one of them is going to be Qualcomm, because Qualcomm dropped, again, competition-wise. There's something there with Intel, but they bounced up. There's a real positive effect from this, but Qualcomm might be good now to hit our triple dip on there, our double dip. Remember, I still haven't got those. I'm waiting. They even sold off pretty big, so this helped us out a lot. So I'm going to keep my eye on Qualcomm there. Then watch AMD. Remember, we have those weeklies. I don't know what price they're at. Oh, we have those 53 calls. So we have those weeklies that we were up on, then they came down. So that's going to be interesting with AMD, but we got our hand in the cookie jar. Yeah, that play's closing. Remember, we spent $20 on that, and that was playing the last breakout from 2 weeks ago, if you guys remember there. But then also watch Microsoft. So we still have that Microsoft play for earnings. Remember, that thing has been up 70%, 100%. It's been holding value. That's going to help launch it up there again. But watch all of these chip makers. If you guys have any other ones, call them out, put them down there. But finally, too, watch Abivai. They got Merck today. And why, you know, this is long term. We're taking a loss on this, but people have asked, you know, should I buy this for a long term? Is this a good one? Again, do your own diligence, option trading, extremely risky, stocks are extremely risky, all that. But I'd be careful. It might be coming into a pain trade here, because, again, the fact that it's kind of selling off here, this is kind of a danger zone. Again, with a dividend stock like Abivai, again, it can grow a lot, but there's no real rush. You know, let this kind of play out. Wait till it kind of even stalls out for a little bit. You might give up on $1 or $2, but don't want to catch it in a downtrend. You know, we're on the higher trend. You know, we're banking for the upside. At least we got, you know, the reason why I bought it, and, you know, I was expecting this to go down, but at least I'd be able to get that first round of dividends. That's why I was really willing to take that risk. So if you haven't established a position already, I mean, you could give it some time. Again, so just give it a little bit there. You know, let time kind of be the factor. You know, we haven't even made our next deposit for the month. If you think about it, the month isn't even over. So maybe reevaluate this coming into February if you want to add those for the long term, or at least watch the price action and don't try to catch the falling knife, essentially. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. And you know what? One thing I really need to tell you is make sure you put a smile on your face, baby. You are blessed. Even if you don't want to smile, just give me a little fake half-ass smile. Like, yeah, okay. Let's go, baby. But for real, y'all got to stay positive. Y'all got to be in the game. Remember, have the endurance. You guys have the strategy. You got the game plan. You got a blueprint, a model, whatever you want to call it. Take it to the bank. Post the plays. Let's go back and forth. I need some lateral thinking. Give me some different possibilities, baby. And keep knocking the door. Seeking ye shall find, my friends. Let's go!